Attention veterans, in the last 2 or maybe even 3 years, have you purchased a home with an interest rate, let's say over 7 or 8%? Well, if so, I have great news. There's an opportunity right now to beat the market to refinancing. So, as a mortgage broker, we have a lot of options. We can do a lot of things, special rates. We have wholesale rates, so we're able to cut out a lot of that fat and make sure we deliver straight to you the best product and the lowest costs out there in the market. And right now, one of those specials is being run by one of our top lenders. And so, what this is a streamlined refinance for veterans, for VA loans. Um, there's really, really great benefits to it. Obviously, you're going to be able to save. You're going to be able to get well under market value rates right now for a refinance. We can close in 1 to 2 weeks. A lot of the application process, because this is what they call a streamline, is super simple. You don't actually even need a appraisal. We're not going to be looking at your debt to income ratio to see if you qualify like we did when we helped you with your purchase. There's very little closing costs, and what the closing costs do exist, like if the VA charges a funding fee, for example, those things can be rolled in to the loan amount. But if you have any kind of disability rating at all, 10% or greater, you can actually be exempt from that funding fee. So a couple other things that are really interesting when thinking about whether or not it's the right time for you as a veteran to go ahead and take advantage of this streamlined refinance is a couple of the VA rules. So in Texas, you are not able to have a cash out refinance on a VA loan. And so if you're looking to try to take some equity from your house, you have a VA loan, this could be a really great reason why, because you can actually get a refund from your escrow account. So that could be up to a few $1,000s that's coming back to you in the form of cash that you can use effectively as a cash out refinance. It's a small amount. You're not going to be able to tap into all the equity, but it's a little bit of cash that might be able to help you pay some bills in a time of high inflation. Obviously, credit card debt is through the roof. So if you've got a credit card that you really like to pay off and try to stop doing that interest, you can use that escrow money and pull it back, and then your escrow is rebuilt again through the refinance. So it's a unique way to try to access some extra cash. And then you can also defer the payment. So when you purchase, you have 30 or more days, depending on where you closed in the month, that you didn't owe that next payment. And same thing happens with the refinance. So if you're going to be refinancing and we plan it out correctly, you can have almost up to 2 months where you're not making the next payment. That's extra cash that you might be able to put towards high interest debt. So as a veteran, right now there's a special well under market rates. Take advantage if this is something that's interesting to you, especially if we want to look at the total cost of what you've got going on your balance sheets. If there is some high interest debt, if there's maybe some repairs or some other things that you want to do with that money, we can go ahead and take advantage of that now and make sure we're accomplishing multiple goals at once. So please, if you have any other questions, these are just a couple of the highlights, a couple of the reasons why it might work and might be something that is interesting to you. But if you have any questions at all, call me. Let's go over your situation. Let's see if it makes sense. And if it doesn't, that's okay. We'll continue to wait